Eric Muade for the weekend of October 1st and October 2nd, 2014. Let's take a look at how markets closed on Friday. We see that the major averages in the US were up. Obviously, Dow closing at all-time highs, up 1.1%. Nasdaq closing at multi-year highs at up 1.4%. S&P 500 fresh all-time highs, up 1%. Gold was down huge, about 2%. And we see that the VIX was down surprisingly only 3%, and crude oil was down about 0.7%. For the week, S&P 500 was up 2.7%, and for the week the Dow was up 3.5%. For the week, the Nasdaq was up 3.2%. So let's go to the charts. And we see here with the Nasdaq weekly closing at 14-year highs. Nice close here, but now we see that the market is gonna have to decide whether it can stay above the previous weekly closing high of 4582.90. So we need to watch that. If the market stays above that level, then that's bullish. If the market cannot hold above 4582, if it trickles down back below that level, that's going to be a sell signal as far as the market is concerned. Don't forget the recent move in the market began when the RSI on the weekly found support on the lows line, and so once we went below the line and back above it with uniform activity, we also moved back above 50. The market has surprisingly had a straight shot to new highs. So we'll see whether the market is running out of momentum here. We shall see on some charts that maybe the market looks tired. You go to the Nasdaq Daily, and we can see here the level to watch on a daily basis is 45.98, which is the previous daily closing high. As long as the market holds above that level, then that's a breakout. If it cannot hold above 45.98.19 on a daily closing basis, if it moves back below that level, then this could be a trap. Don't forget that there's a possibility, if the market does not hold above current levels, is we might be making higher highs in price and the market might be making lower lows on the RSI, which might suggest that it is running out of momentum. Also, another view is you can see that here, as of Friday's move, the market is above the declining RSI tops. So that seems like a breakout if you look at it without any other consideration. So there's a possibility that the market could actually be trying to get out of this range in terms of moving above the previous highs on the daily RSI. The problem now comes because where the market has been stalling has been on this RSI level there. The previous stall came here, which was the recent highs. So that high there before we had this drop came off this break on the RSI. And so what the market has done is come back to the same level, which is where we ended Friday. If the market cannot hold above that level and this becomes resistance, then we should expect that this is where the market turns around and at least has some go at lower prices. Now, this is going to be evident on some of the next charts I'm going to show you, that there seems to be some type of resistance here on the daily for the major markets. And the best view can be seen by the Dow. Now, this is the Dow on a weekly chart, and we see that the Dow is now back above the previous weekly closing high of 17,279. So as long as it holds above that, then this is a successful weekly breakout. If it cannot hold above that and moves back below 17,279, then that's going to be a failed breakout. We can see on the RSI that this is very likely because now the market has come back to the previous RSI resistance line on the weekly. The most recent resistance was here at the highs recently, here, which led to the correction right here. So we see the market has come back. If this is not where it can move above, if this becomes resistance and it starts moving lower, then we should expect that the price is also going to break down below 17,297. And so we are looking at this to be resistance, is what I'm getting at, because of this is where the market has been stalling. If you take a look at the Dow Daily, this is also evident. As you can see, the previous daily closing high was again 17,279.74. So the market holding above that is bullish. If the market moves back below that previous daily closing high, then that's a failed breakout. Now the RSI is telling us that this is where you'd expect resistance. If you draw a straight line connecting the highs on the RSI, going back to beginning of 2014 all the way to the most recent high, which is here, you see that the RSI is coming in contact right there as of Friday's close. Seems like this is where you'd expect resistance. Also, there's another line. If you draw it like that, now that line also gave you resistance, which is the previous high before this relatively big drop. And so we've come back all the way and testing that break point. If the market starts moving lower as of the beginning of the new week, new month, expect this to be where it pushes the market back below the previous daily closing high of 17,279, and also the RSI confirms resistance, and that would be probably a best time to go short. Before we go on, let's go back to the Nasdaq Hourly. I forgot to mention something on the Nasdaq Hourly. So this is the Nasdaq Hourly, and if you draw a straight line connecting the previous highs on the hourly for the Nasdaq, so connecting the previous highs there through there, once we broke out here around the 20th of October, which was this move here, the market has stayed above the extension of that line. So extend the same line, and ever since then the market has been using the line for short-term lows and a move higher. You can see double bottom there and a move higher. So we can conclude that on the hourly, as long as the Nasdaq is holding above this declining line, the market should be bullish. So the hourlies do show that the market has and continues to have momentum because it's holding above the previous breakout line. Also on the hourly, if you draw the line connecting the previous hourly closing high, the market gapped up and stayed above that range. So this is a very nice breakout. All the market needs to do is stay above that. Problem is there's a huge gap here that needs to be filled. So it's very likely that the market will come back to test that gap and fill the gap before it can decide where to go next. So let's keep that in mind, that the hourlies do continue looking good. Let's go to the Transports Weekly, and we see here that we are now coming in contact with the top side of this channel. About 3 weeks ago, the market held support on these lows here. Now we've come all the way straight shot back to the top side of that channel. Seems to be like an extended move in my opinion. In fact, let me show you why I say that. If you go to the Dow Daily, take a look at the MACD. First and foremost, take a look at this look on this daily chart. 1 year daily. From here to here, that's the biggest move in the market in the short time throughout this period. So this is the biggest straight shot in the market going back a long time, which suggests that it should start getting tired. Now if you take a look at the MACD, you'll see that over the same time period, this is the biggest straight move in the MACD here. There's no other period as long as this, suggesting that this is a very extended market in terms of the range it's taken in a short period. Now the last time the market did the same thing, let me show you that, is sometime late to summer of 2013, which is this move here. And it's similar because it made a fresh low on the MACD straight to a fresh high, and that was this period here. And once it moved straight from here to here, it eventually gave back all those gains. So all I'm saying is the same thing is going on here. We are making a fresh low on the MACD there, and then immediately going back and making a fresh high on the MACD. So from fresh low to fresh high in a short period, more than likely that's a tired move. It will not surprise me that the market starts creeping to the downside based on that extension of that move. Let's go back to the transports weekly, and what I was getting at here is, so we are back to the top of that channel, which is parallel to that channel there. So that's one view. Another view is this previous support line. Now the previous support line was holding the market together during the bullish phase. It was a very nice line to watch for bounce. And so what the market is doing here is back testing the break of that line. So we did break below the line right there. We broke below the line, and now we've come back and are back testing that line. If we can't hold above the extension of that line, this could be where the market starts reversing. Also, on the top side of the weekly RSI, you can see that this is where resistance can be seen. If the market pulls back from this range, this is going to be a nice ideal point that the RSI confirming this is where traders need to go short. So we'll see how that's going to develop the beginning of the week and the beginning of the new month. Transports on a daily chart, and you can see here what's going on is we made a higher high during the week, but the technicals continue showing lower lows. Right here you can draw them like that, lower lows on the technicals, which is negative divergence. Also, if the daily for the transport is going to do well, it needs to be above this declining line connecting the highs. Right now it seems like resistance. So there's also another view, which is the break of the RSI here. So this break there is what gave you this high and a significant move lower. So we draw a straight line from there, and you can see that the market right now seems to be respecting that range. Resistance here, if it can be confirmed with a down move in price confirming resistance on the RSI here, is going to be a red flag, more than likely indicating that this move was a trap. So if you're looking to go short, just wait for the market to confirm by a couple of down days, maybe a strong down day that would confirm that the RSI is telling you the next move in the market should be lower. Go to the S&P 500 weekly. And we can see here closing at fresh all-time weekly highs. The price to watch is 2010.40. S&P 500 needs to hold above that. If it moves back below 2010.40, then that's going to be a failed breakout and time for shorts to place trades to where the market is going to accept their idea that the market is poised to go lower. A lot of things here suggesting that this is where the market could stall. The reason why I say that is we go back to the back test of this line. So this line was broken right there, and that break there was responsible for the recent strong move lower. All right, so that is being back tested there. If it fails to hold above the blue line extension, so we're talking about the extension of this line, that should be resistance. Also, don't forget that it seems to be an area with the RSI showing topside resistance. If you connect the recent RSI highs, you see that they are all coinciding with where the market closed. More than likely this could be a trap, especially if you see the market moving back below the previous weekly closing high of 2010.40. So anything below that is a sign that the bears have broken the recent breakout in the market and also the recent uptrend. Looks like to me this sharp reversal from here to here was very strong and very exhaustive. It would not surprise that now the market has to give back that strong move to new highs. Let's go to the S&P 500 daily. And so a couple of things here. So yes, we are closing at all-time daily closing highs. So we need to hold above that. And we see that there's a short-term RSI breakout. Now this is good. Holding and breaking out above the declining RSI line. That's good. But there's a problem. And the problem is the fact that the previous highs in the price came when the RSI broke down there. And so we draw a straight line. you see that if the market can't move above that line, then this move to new highs was a trap. If the market rolls over here and starts pointing lower, this here is going to be confirmed as a trap. More than likely, we might see the market pull back. Also, just take a look at this big move. This is from here about 1820 all the way to 2018 in about two weeks or 3 weeks. This is the biggest move in this entire daily chart. This is very exhaustive, and it should more than likely lead to a pullback, if not lead to a significant high in the market. If you go to the S&P 500 hourly, the previous hourly closing high was 2018.21. That's the previous hourly close, and you can see that the market did not close at fresh hourly highs, if that makes sense. So on an hour-to-hour basis, the market has not yet broken out above 2018.21. So if this becomes resistance, if we open lower, then this is going to be failed breakout, and the hourly charts could suggest move lower. Also, I see the possibility of connecting the highs on the hourly RSI, and that connects these highs here through these highs. So there's some type of resistance line on the hourly based on the tops. And remember, on this one I'm using RSI 21 and not 14 to get this view on the chart. All to say that if you take a look at your hourly charts, the previous intraday highs have not yet been breached by the S&P 500. Let's go to the Canadian market. And the one thing we see here is we are looking at the crossover between the 13-week moving average and the 34-week moving average, which could be bearish. And ever since we made this major drop here all the way, so we had this major drop, and we are bouncing back and finding resistance at the declining 10-week moving average and the 13-week moving average. Also, that crossover is the exact opposite of the previous bullish crossover above the 13-week moving above the 34-week moving average. That was bullish and responsible for this move. If we get the crossover here, which is bearish, it could suggest the possibility of grinding lower over time. Go to the daily, and what we see here is the previous break, if you draw it like that. So there was a break of the trend line there, which is this break middle of September, so somewhere around here, which led to another drop in price. So an extension of that previous break is where the market is trading, and you can see that this could very easily become resistance, backtest resistance, and suggest lower prices. Also take note that it is stalling around the 200-day moving average here. If it can't move back above the 200-day moving average, could suggest lower prices. Keep in mind that the 50 is already pointing lower. So lots of things indicating here that this could be where it, after the recent snapback recovery, that this is probably very easy lead to lower prices. Also, there's another view of why this could be the case is because the break there, draw a straight line, which is around the 50, is exactly where it's stalling. So if it can't move above this range here, I would expect this to be where it stalls again and at least makes an attempt at testing these highs or these lows, which could mean lower prices here. Let's take a look at Apple, and we see here it continues holding above 102.50. We've been saying for a while anything above 102.50 is going to be indication of strength, confirmed by the fact that the RSI continues holding above 69.1. And just to remind you, holding above 69.1 like we did in this period here is always going to lead to bullish price action. So as long as Apple is holding above 69.1 on the monthly, it should continue doing well. We see that on the weekly, which is the weekly chart in front of you, that it has done well ever since it broke out above this 102.50. previous weekly closing high there, and this was a nice consolidation area. Finally broke out of that range, continues looking good. RSI is back above 69.10. If the stock is to do well, it needs to hold above 69.1 on that weekly chart. And the recent bounce off these lows here came off this RSI line. So this RSI line was established with these 3 points. It became support here, which was this lows here at about 72 post split price, and also held recently there. So it continues looking good. The RSI does need to stay above 69.1 if the stock is to do well. Now let's take a look at monthly charts. We'll begin by taking a look at the Nasdaq. And let's go to the monthly. For the Nasdaq, we see that it is breaking out as of last month. The close of last month could be a good breakout, or it could be a trap. The price to watch on the Nasdaq is 45.80.27. Apologize for the writing there. I'm using a mouse to write. So 45.80.27. If the market continues holding above that price range, that's very bullish. The RSI continues holding above 69.10. That's a sign of a good market. If it moves back below 45.80 or 45.80, that's not good. If the RSI moves below 69.10, which is what it was doing at some point last month, you can see that it led to a big drop intra-month during that time. So that's the Nasdaq. Take a look at the S&P 500 on a monthly chart. You can see it too is breaking out on a monthly, and it needs to hold above 2003.37. S&P 500 holding above that on a monthly closing basis is going to be bullish. If it moves back below that range, that's going to be a sell signal short term, okay? And also the RSI holding above 69.1 is an indication of momentum and strength. If it breaks down below that range on a monthly basis, expect a big down month when that happens. Let's conclude here by taking a look at the Dow. You can see the Dow also broke out above the previous monthly closing high. So let me give you that price range. So that nice breakout there, and that was at 1798.47. So keep those prices. If the market holds above that and stays above that, that's very bullish. If it moves back below that, then that's an indication of time to short. Keep in mind that the Dow is closing with here at the end of October with its RSI at 71.42. If it moves back below the previous monthly closing high and the RSI moves back below 69.1, then expect to have a big down month whenever that happens. Eric Mwathe, good luck, peace, and blessings. Woo!